People ask us all the time, what happens if we can't do this? Or if nobody quite says blow it off, but if it just isn't possible for us to get this right? And the answer is, well, what's at stake is, and the U.S. government really wants this information. They're battling U.S. tax evasion. So they're looking for these investors. And if you don't do your duty, your obligation to let them know where your significant U.S. account holders are or your significant U.S. shareholders are, then your own income is at stake. So whereas you might have gotten, let's call it $100 of interest income from, someone borrowed money from you, you're a foreign bank, you get $100 of interest income. Instead of getting the 100, if you don't comply, you'll get 70. And that's a great big bite out of your returns. So economically, you have zero incentive not to comply. There's a huge disincentive, and that's the whole point, is to make people kind of get off the stick and help the U.S. government find these tax evaders. So let's say you've taken a loan from a foreign bank and you're making a $100 interest payment. If you don't ask the right questions as to whether they're compliant, if you don't get documentation certifying that they are, and you don't information report to the IRS to let them know the kinds of payments that you're making and the people that you're making them to, then you get stuck with secondary liability for the penalty. So this is money that's not even income to you. You're paying money to someone else. This is an additional expense to you. And that's an expense at the 30% rate that no one can really afford to take.